Welcome, everybody. This is the webinar / webcast for the Washington Hospitality Association and the Small Business Administration to give everyone an update on what's going on with loans and the changes in the Ppp. I want to welcome joining us today. We have Steve Burke, who is the Western Regional Manager for the Washington Small Business Development Council. We also have Janie Sachs, the Outreach Specialist with the Small Business Administration, and Aaron Frazier, the Director of Tax Policy for the National Restaurant Association, to help be our guides today. Thanks to the three of you for joining us.
Thank you for having us.
Our agenda today, we're going to let Stephen and Janie take us through a PowerPoint. If you have questions, please put them in the chat room. They're not going to take verbal questions during their presentation, but at the end, we will open it up to answer questions. Also, I think to the degree that Aaron and Janie and or Stephen can answer questions in the chat room as they go, they intend to. So with that, Stephen, why don't you get us kicked off?
Will do. Thank you so much. We're delighted to be here and be able to have this moment to speak to the members of the Washington Hospitality Association. We'll go through a little bit more of an introduction as we get into this, but I thought I would start by giving everybody some update on some of the numbers. As we mentioned, if you enter your questions into the portion of your screen that says Q&A as opposed to the chat, that will give us a better opportunity to be able to answer those as we go through this. I thought I'd give you a little bit of an update on where we are with certain of the SBA loan program numbers. Both the EIDL, which is the Economic Injury Disaster Loan, as well as the Paycheck Protection Program, or PPP. We've seen substantial progress in both of those, and especially in both the redo of the PPP as well as the reopening of the EIDL loan. As of today, actually as of the 21st, I should say, so that would be Sunday night, nationwide, the EIDL has processed 1,775,539 approvals for a total of $113.3 billion. And just in Washington, in the EIDL loan, we've processed 37,808 loans for $2.6 billion. In the PPP, nationwide, the loan count for PPP is 4,666,000 for a total of just under $515 billion. In Washington alone, we have 96,589 PPP loans at $12,151,909,000. So both of those have been really progressing nicely. If you can find a lender who is willing to continue to process your PPP loan, your new, the last date that's available under the current legislation is June 30th. And so anybody who hasn't applied for a PPP and would like to, and can find a lender, you can do that at the SBA website, sba.gov, and do a search for lenders, if you would like. There's still about $120 billion available in PPP funding, but the legislation is requiring it to end on the 30th, which is a week from today. And most of the lenders are cutting off their incoming applications sometime this week because they need that time to process those loans. So we'd really encourage you, if you know somebody who would like to apply, find a lender who can receive your application. There are some fintech lenders as well, including Intuit, Square, Cabbage, PayPal, who can have been processing PPP loans. So we really would like to get the rest of those funds out into the small business use. So I encourage you to do that. They've also reopened last Monday. They reopened the idle loan. And so if you are interested in applying for that, there is a portal that's now available, and you can go to sba.gov and search for idle, and you'll see the portal to apply for that. It's now reopened for everybody. It was closed for a time being and went just for those that were involved in the agricultural business, but it's now open for everybody. So we're really pleased with the progress. What we're going to talk about today is more on the topic of the PPP loan forgiveness. We're going to cover these. I'm going to give you a little bit of how to inquire about your application status if you've already utilized the idle loan. And then we're going to talk about what it really is the hot topic today is the loan forgiveness application. I'm going to cover an overview of it. And then following my portion, I'm going to introduce Janie Sacco of the SBA, who's going to cover some real examples about how to complete this PPP loan forgiveness application. And again, feel free to enter your questions in the Q&A section, and we'll try and get to those as we go through this. So start off with, there's a couple of revised forms. The revised basic form is down from 11 pages to 5 pages, although there is an additional 7 pages of instructions. And the easy form is now down to 3 pages. We'll talk about what qualifies, people who can qualify for that. We're going to talk about the documents that are required, what constitutes cost and forgiveness and payroll use. There's also the impact of the idle loan on the PPP. How do you actually complete the loan forgiveness application? What's the worksheet A? So how this applies to individual self-employed people, sole proprietors, and then what is the representations and certifications that you've got to provide? So on the idle update, as I had mentioned, they did reopen those on the 15th, and these are being processed by the Small Business Administration Office of Disaster Assistance, called the ODA. And so the processing of that has picked up dramatically, and many of the people that clients, small business owners that we talk to are getting notifications about those. But there is also an idle advance. Many of you have heard about this. It's based on $1,000 per employee up to $10,000 and can become actual grants. But we're going to talk about the limitations to that here. As a kind of a tip off in the beginning, if you are doing both the idle and the PPP, the actual amount of loan forgiveness that you're eligible for is going to be reduced by the amount of the idle advance that you received. If you haven't gotten any information on your idle loan and you want to check on that, here is an 800 number. Feel free to jot this down. Our tip off here is that when you call that number, you want to ask for somebody who's a tier 2 person. They're the ones that actually have access to everybody's update on their account and what the status of that is. So if you've applied for it and not heard, that's the telephone number that you want to call. We'll, by the way, make this slide deck available to everybody following the presentation so that you can follow up with it if you wish. I want to start off with the fact that the information provided in this presentation is really relevant as of Thursday, Friday last week. I haven't updated it since then, even though just this morning I received 31 pages of additional guidance. Most of what's in this slide presentation is current, but you need to know that neither I nor the Washington Small Business Development Centers, of which I'm a part, are the final authority on this information. It's subject to change with a new legislation, which I'm hearing more talk about, as well as additional rules from Treasury and the SBA regarding this. So there's the legislation that gets passed, and then there's these rules that Treasury produces, as well as the loan application and loan forgiveness application. all of which get revised as things change. But what's new in the Flexibility Act? So there was the PPP loan, then there was a PPP2, which provided more money. And then on the 5th, we had the PPP Flexibility Act, which provided greater flexibility, with the idea of our hoping that more small business owners are going to be able to apply for loan forgiveness and get 100% loan forgiveness. There is a still, so it's changed from 8 to 24 weeks, but you can still choose to have the 8-week period. If you're one of those particularly who received your PPP prior to June 5th, and you want to stick with your original 8-week period, you can do so. You're still going to want to use the new loan application form, which we'll cover here as we go through this. The loan term has changed from 2 to 5 years for new PPP applicants after June 5th, but for those of you that have your PPP loans and receive them prior to June 5th, you can meet with your lender who provided those loans, and by mutual agreement, if you wind up with a loan, can extend that to 5 years, but the lender has to agree along with you as to the basis for why you'd want to do that. As I'd mentioned, our hope is that with this additional flexibility that came out on the 5th, we're hoping that more people will qualify for full loan forgiveness with fewer hassles about it. So what are the changes in addition to the two I just mentioned? Well, the FTE requirement seems to be more flexible, and the documentation that I received, the interim final rule that I received just this morning of 31 pages, tends to support this and provides more of a guidelines as to how it's going to happen. Essentially, if you cannot rehire your former employees, or if you cannot hire qualified employees to come back into your business, you can't find them, or you have a documented inability to return to the same level of business activity, that's all new flexibility in the FTE, which stands for full-time equivalent process. The employer payroll portion has been reduced down to 60% from 75% for loan forgiveness, and it's going to be the fundamental basis for the actual loan forgiveness. We'll cover that more in a minute. The covered period has now been extended to be defined from March 1 to December 31st. It's not going to be in any extent the covered period, even if it's 24 weeks and you get a later loan, it's not going to go past the end of December 31st. Loan forgiveness to be applied for within 10 months after the last day of the covered period, or it converts to a loan. So we now have a time frame as to when you have to have submitted a final loan forgiveness application to your lender. If it converts to a loan, and we hope that many fewer will convert to a loan, but if it does, it starts 10 months after the end of the covered period. No later than that, and if you don't submit it by then, it will automatically convert to a loan. Deferral of, there's another portion in here in the new Flexibility Act that allows you to defer a portion of the employer payroll taxes. Our guidance is that you not do that. It's deferring 6.2% of payroll taxes, the employer portion, during the covered period. We don't have clear guidance on what that's deferred to, but if you can pay it, it really only makes sense to go ahead and do it, because it's not going to exempt you from it. It's just deferring it. So there's a new EZ form. This one is only 3 pages, and only 2 of which need to be submitted. How do you qualify for this new EZ loan forgiveness form? First, you have to be, if you are, not have to be, but if you are self-employed and you have no employees, or, and again, you pick one of these 3, you did not reduce the salaries or wages of your employees by more than 25%, and you did not reduce the number of hours of your employees, or you experienced a reduction in business activity as a result of health directives related to COVID-19, and you did not reduce the salaries or wages of your employees by more than 25%. Borrowers submitting the EZ form, you have to certify, A, that you did not reduce the number of employees or the average paid hours between January 1 and the end of the covered period. other than documented reductions due to the inability to rehire or find qualified employees, which I'd already mentioned. 2, that you were unable to operate between February 15th and the end of the covered period at the same level of business activity as before the covered period due to the COVID-19 related compliance. So those are 2 areas that on the easy form you have to check the box as to which one of these, and your representations and certification signature page says that you have to choose one of these 2. All records relating to the loan must be maintained for 6 years after loan forgiveness or the loan is paid in full, and you must be willing to permit inspection of those documents on request. So the initial portion of the longer PPP revised loan forgiveness application, this is not the easy, this is the longer one, which, as I mentioned, has gone from 11 pages down to 5. And here are the key things that they want. They want to know who you are, what's your business identification number, employer identification number, what's the PPP loan number, meaning which loan did you get, and who was the lender that you worked with. In addition, they want the loan amount, the disbursement date, the employees at the time you originally make your application, and the employees at the time you request forgiveness. They also want to know what was the idle advance amount and the idle application number. Another area at the top of this application form, you have to select your payroll schedule. You can choose weekly, bi-weekly, twice a month, monthly, or other. And this is used to document how and when you incur your payroll costs. You also have to identify the covered period time frame. It can be either the 8-week period or the 24-week period following funding of the PPP. But this covered period also, and on the form, further defines the actual original loan eligibility, which you're going to have to certify that under the rules you are eligible for it in the first place, the use of the actual funds, and then your qualification for the 4 forgiveness requirements. I want to point out that while you have to choose a covered period time, you can, and the new guidance that I received this morning indicates that you can submit it at any point in time that you are ready and hopefully feel as though you are completely eligible for full loan forgiveness, which is what we hope will happen to most. Also, some costs incurred before the 24 weeks, but paid during the 24-week period, and I should say 8 or 24, and some costs incurred during the 24 weeks and paid afterwards can qualify for forgiveness. There's also an alternate payroll covered period, which can allow the 8 or 24 weeks to start on the first day of the normal pay period following disbursement of the funds. And that is for payroll portion only, not the other 40% that you can use the PPP funds for. But if you get, for instance, funded on the 20th of the month, but your next payroll period starts on the 1st of the month, you could actually start the covered period on the 1st of the month rather than on the time frame that you had dispersed, which is the fundamental basis for when a covered period starts. For those of you that may have received a $2 million PPP or more, you would check the box that's on the front, on top of the loan forgiveness form. In checking that box, you're going to indicate to Treasury and to the SBA that you're going to be one of those who is highly eligible for an audit. Treasury has made it clear that they're going to focus their audits on those. They're certainly going to do audits of those that are under 2 million. But if you received a PPP for under 2 million, make sure that you do not check that particular box. Let's talk about the EIDL loan and PPP. I've already mentioned a little bit of this. The Economic Injury Disaster Loan Advance. So this reduces the PPP loan forgiveness by the amount of the EIDL advance. The EIDL application number on the PPP application is used to check if the PPP recipient received the EIDL loan, and they're going to cross-check these. That's the whole point. If they did and it was used for payroll, the EIDL should not have been refinanced into the PPP. I also received some guidance this morning that only those that have received their EIDL and PPP prior to April, I think 5th or 6th, would have it refinanced. If you received it after that, it would not be refinanced. But we need a little bit more guidance on how the EIDL and the PPP combined are going to be dealt with. We think it's probably going to be on a case-by-case basis. The thing that's most important about this, though, is that you cannot use the funds for the same purpose. We know specifically that there's going to be a lot of EIDL loans based upon the numbers that I gave you at the beginning here are going to be funded after PPP loans are funded and or the 24-week loan forgiveness period is over. So how that's actually going to be treated, probably on a case-by-case basis, we don't have final guidance on, but keep in mind that you're going to need to keep the documentation. If you receive both of these loans, you're going to need to keep the documentation of these for some time period. I'll describe that here at the end, but you do not want to be utilizing either of these funds for exactly the same expenses. What are the revised loan? This is the longer form. Loan forgiveness documents are required to be submitted. As I'd mentioned, it's now 5 pages long, 4 of which should be submitted to your lender. These include the PPP loan forgiveness calculation form, what's known as the Schedule A, and then there is a worksheet to the Schedule A, and then the representations and certifications page. Janie is going to refer you to each of these as soon as I'm done with this portion of the presentation. All records relating to the loan must be maintained for 6 years after the loan forgiveness or the loan is paid in full, and you must permit inspection of these documents on request. So completing these requires you to start with the worksheet to Schedule A. Then you use the data that you compile there, and Janie's going to show you this. You move to completion of Schedule A. Then you move to completion of the loan forgiveness form. And finally, you sign the representations, certifications, and signature page. The purpose of Worksheet Schedule A is designed to compute the eligible compensation for each employee, including any who had their salaries reduced by an employer. It caps total cash compensation at $100,000 per employee on an annualized basis. It establishes the total employee status for the covered period in terms of their actual cash compensation as well as their FTE, and it uses the FTE and payroll dollars to determine any reduction in the loan forgiveness. There are 2 tables on the Worksheet A that help to determine the salaries and wages paid and the hours worked for each employee during the 8 or 24-week period. So this Worksheet A is designed to identify, and I want to cover the definition here of payroll costs. It includes salary, wages, commission, cash tips, vacation pay, hazard pay, bonuses paid to employees that are within reason and documentable as valid, and parental, family, medical, or sick leave, as well as any severance pay that you might have paid to somebody. So essentially all cash contribution and the employer portion of payroll costs for health insurance, retirement plans, local state taxes that are paid during the covered period. Excluded from Worksheet A are any salaries in excess of $100,000, employees outside the United States, or those who received family leave under the Families First Act, which was the first stimulus bill. Also excluded for Worksheet to Schedule A are independent contractors, and it's important to note that independent contractors are not eligible as employees under a PPP. So if by chance, when you submitted your original PPP, it included an estimate of funds paid to 1099 or independent contractors, those funds are going to have to be returned as they were not originally eligible for the use of PPP funds. Also, owners receiving W-2, self-employed people, as well as partners of an entity, these all add their information combined directly to Schedule A. They are not put on the worksheet. All right, to get the full loan forgiveness, the new Flexibility Act that was signed on the 5th has substantially increased that flexibility, and you have three choices and have to choose from one of these. Number one, you maybe had no reduction in employees or the average paid hours. Number two, called Safe Harbor number one, you were unable to operate between February 15th and the end of your covered period at the same level of business activity as before February 15th. If you are using Safe Harbor number one, you would most likely not submit your loan forgiveness application until after the end of the covered period, whichever one you choose, either the 8-week or the 24-week. If you were to choose a 24-week, it might run as far as the end of this year, but it would not run past December 31st. But if you're going to document your safe harbor for full loan forgiveness under this, then you would most likely wait to submit your loan forgiveness application until the end of your covered period. Or safe harbor number two, if you actually satisfy the FTE requirements as shown on the worksheet, tables 1 and 2 that I described earlier, then you would qualify for those. And once you qualify for that FTE safe harbor, you could then submit your loan application as soon as you are ready and have all of the documentation, your loan forgiveness application. So to get the full loan forgiveness, the average may still, and on the worksheet, tables 1 and 2, you're still going to have to document, particularly if you choose safe harbor number 2, what is a FTE or a full-time equivalent. You can add the total employee hours average in a week and divide that by 40 to get the FTE, or calculate every employee who works during the covered period of 40 hours per week or more as 1.0, and those who work less than 40 hours as a 0.5. Once you meet that FTE requirement and the safe harbor one or the other, one of those three that I identified on the previous slide, now the total loan forgiveness and any reduction in it is going to be based on the use of the PPP loan funds. In that, you use at least 60% of the loan funds for payroll and not more than 40% for rent, utilities, and mortgage interest. That means that you can utilize those at the 60-40. But if you use less than 60% for payroll, that is going to reduce the amount of loan forgiveness. So the primary criteria now is the extent to which you use less than 60% for payroll. For those of you who are self-employed individuals and sole proprietors, you're eligible to use this easy loan forgiveness application if you meet the conditions that I identified a few slides ago. And you can, or if you want to, you can use the 5-page revised loan forgiveness form. Forgiveness is related to payroll costs. And the 850 seconds is the original determination based upon the individual's 2019 Schedule C. So that's what the maximum amount of the payroll for independent and self-employed sole proprietors would choose. And if you choose the 8-week covered period, then it's 850 seconds, and that's the maximum amount that you could get for forgiveness. 2.5, if you choose the covered period, they use a different metric for it. That's based on 2.5 months of the 2019 compensation, also on the Schedule C, line 31. So the amounts paid to the user of Form EZ do not exceed then $15,385 per individual. This again is the cap at $100,000 cash compensation. And you, if you choose the 8-week covered period, but it turns out to be $20,833 for those choosing the 24-week covered period. Amounts paid to these individuals during the 8 or 24-week covered period, I'd mentioned this before, are totaled and added to line 9 of Schedule A, if you're using the longer revised loan form. For all PPP loan forgiveness applications, whether you use the easy form or the new 5-page loan forgiveness, revised loan forgiveness form, and you submit that at the time that you do, the lender has 60 days to give you back a decision on whether or not you actually do qualify for full loan forgiveness. Then at the end, you've got to do these representation certifications, and it's going to require you to, with a certification and the signature, certify that you know and understand the rules of the PPP, including the original eligibility, as I'd mentioned, the use of the proceeds, and the loan forgiveness amount. The SBA can review these and the loan forgiveness applications as it deems appropriate and at any time. Lenders are required to confirm the calculations on the loan forgiveness application if either you or the lender wants to submit to the SBA for a review of your loan forgiveness application. You can do that. And the SBA then has 90 days to give you a response to that review. And then if you still have a dispute over the actual loan forgiveness, there is an appeal process that will take longer, and you would work with your lender through that appeal process. Here are some things that we still don't have, although we might have some clarity on it today, but it's not clear with the EIDL impact. I'd mentioned this on PPP will be for the EIDL loans not processed before the PPP is issued, or the EIDL was not refinanced in the PPP. Also, for those that had their PPP loans prior to June 5th, your loan documents say 2 years. We don't know how every lender is going to react to your request to change it for that portion that winds up turning into a loan. If you do have a portion that does, and we hope that it's less, react to the mutual loan modification capability. So it can be under legislation modified, but the lender does not have to agree to it. We would hope that most will if you wind up with a portion that converts to a loan. Also, expenses paid for PPP forgiveness funds and or EIDL loan funds. Will those be tax deductible at the annual tax reporting purposes? We suspect not for a forgiven portion of the PPP, meaning that if you get a forgiven portion of the PPP, it's probable that you will not be able to deduct those because essentially you were granted those funds. But those that are the loan portion of the EIDL, probably not the EIDL advance, but for the loan portion of the EIDL, you may well, because it's a loan and you have to pay it back, probably have to be able to take any of those costs and deduct them from your taxes. But we don't know for sure. By the time you do this, your CPA should have more guidance, and we recommend that you meet with your CPA on that. You want to maintain all of the disbursement documents and loan information documents for the EIDL. Under the legislation for the EIDL, it's required to be maintained for 3 years. And under the legislation for the PPP, those are required to be maintained for 6 years. I just wanted to follow up with you about the Washington Small Business Development Centers. We're here and ready to help you. We have 25 locations located around the state. Many of you may have already worked with us, and those of you who haven't, we would encourage you to do so. Our advisors are up to date on this information. There's a total of 32 certified business advisors around the state who are ready and able to work with you. You can contact us at wsbdc.org, contact an advisor, or send us an email at washington@wsbdc.org, and that will get you right through to the most appropriate advisor near you. So with that, I'm going to turn this over to Janie Sacco, who's going to cover a couple examples of the Paycheck Protection Program, the actual loan forgiveness forms. Janie?
Thank you, Steve. Okay, let's go to the next slide. What we're going to cover today are 3 different examples. I have enough time to go through them in this presentation, so I will do them each thoroughly and hopefully answer the questions that you have. Next slide. All right, let's start by talking again about the covered period versus your alternative payroll covered period. The covered period that is standard starts on the day that you receive the dispersed loan proceeds. And for those of you who received your PPP loan prior to June 5th, you can take either the 8-week or 56-day covered period, or you can also elect to draw it out and take the 24-week or 168-day period. Okay, so that's your choice. And I think a lot of that decision making is probably going to be based on when you were able to hire your staff back. The alternative payroll covered period is only used or allowed to be used by borrowers who either have a weekly or bi-weekly payroll period. If you have either the weekly or bi-weekly payroll period, then you have the opportunity to have your covered period start date be the day of your first payroll period after you receive the money. And then again, you can have either the 56-day or the 168-day period if your loan was generated prior to June 5th. The only loans that can only use the 168-day or 24-week period are loans that were generated June 5th or later. Next slide. So let's talk about the actual forgiveness forms. What you see here is the first page of the instruction sheet for the EZ form, which is form 3508. And this is the one that is limited to 3 pages. So it is very easy for an eligible business owner to complete. So the first example that I'm giving you is for a self-employed individual as a sole proprietor. So you do not need to send this particular page in with your application for forgiveness, but it does set the tone for how you're going to be thinking about processing your forgiveness request. So again, if you meet any one of these 3 standards for using the EZ form, then I would encourage you to do it, because it does make your work much less in terms of putting information together. So again, we're going to talk about a sole proprietorship and filling out this form using the EZ. Next slide. I put together a couple of assumptions so that you would have this and could see it as an actual example. The borrower is John Smith, doing business as Smith's Computer Services. There's only one employee, John Smith. He pays himself a draw of $7,692.50 once a month. His rent expense is $2,000 per month, and his utility expense is $307.50 per month. And on the form, I'm going to give you 2 different examples in column formats of what a 56-day covered period would look like for John Smith, and then what a 168-day covered period would look for him as well. And these are the links to the EZ instructions and the actual EZ form. Next slide, please. This is the first page of the forgiveness application form 3508 EZ. And this is materially everything that you're going to be completing for your business if you use this form as a sole proprietor. Next slide. To walk you through this, what we have at the top is information you know. It is the business borrower, the business legal name. In this case, it's John Smith. His trade name is Smith's Computer Repair. His physical address is 5050 Primrose Lane in Redmond. and I made the assumption that because he was the only employee of the business tax identification number would be his social security number. You put in the business phone, the primary contact, and the email address of the primary contact. When you drop down below that, you see SBA PPP loan number. You derive this from the SBA authorization document, which your lender should have provided you at the time you received your loan. The lender PPP loan number is the loan number that's actually on your lender's note payable. The PPP loan amount, again, in this case, I assumed it was $20,000. And I also assumed that the PPP loan disbursement date was April 15th, 2020. Employees at the time of loan application was 1, because that's what he put on his application. Employees at the time of forgiveness application, again, remains 1 because he still is the only employee. John Smith applied for an EIDL loan and he received an EIDL advance of $1,000. In the application that he submitted, there was an application number referenced. You should be able to obtain that from your paperwork from the original EIDL application. In this case, I made the assumption that John Smith paid himself monthly, so the monthly box is marked. Next slide, please. And again, as I indicated earlier, I'm going to give you the covered periods for 56 and 168 days. But in reality, if you applied for this loan prior to June 5th, then you would have both options. After June 5th, you would only have the 168-day option. So in this case, because John Smith pays himself once a month, his covered period has to be the date that he received his loan proceeds, which was April 15th. So for the 56-day period, it would run from April 15th to June 9th, 2020. Okay. If he opted to go with the 168-day period, then his covered period would be April 15th to September 29th. Next slide. When you're looking at the bottom portion of the forgiveness application document, the 56-day and the 168-day covered periods do impact a borrower like John Smith. On line 1 for payroll costs for him, he is limited in the 56-day covered period to compensation of $15,385. I assumed that he had no eligible business loans, so I put 0 there. Because his rent is $2,000 a month, for his covered period, he would have had $4,000 go to rent expense. And again, because his covered period in this case is 56 days, he would have had $615 go to business utility payments. So then what you do on line 5 is you do a summation or add up lines 1, 2, 3, and 4. In this case, they total $20,000. Line 6, you simply list the loan amount of your PPP. And then on line 7, what you do is you take line 1 and you divide it by 0.60. And I realize that doesn't seem real intuitive to do, but you do divide line 1 by 0.60. And really what that represents is the maximum dollar amount that would have been eligible for payroll costs using 60% of those funds for payroll. Then you drop down to line 8 and you look at your forgiveness amount. And on line 8, you're looking at the smallest of lines 5, 6, and 7. In this case, you have two line amounts that equal. They're $20,000. So in this case, the forgiveness amount is $20,000. If I were looking at the 168-day eligible covered period for John Smith, the payroll cost for him could have allowed up to $20,833. So let's assume that he paid himself that amount, and he did not allocate anything for loan payments or rent or lease payments or utility payments. You do again the summation. Line 5 totals $20,833. Line 6 again is his PPP loan amount, which is $20,000. And again, you do the math or calculation of taking $20,833 and dividing it by 0.60. That comes to $34,721 in this case. And again, line 8 is still the lowest of the 3 lines of 5, 6, and 7. And again, in this example, it's $20,000, which is the PPP loan amount. Next slide. Page 2 of the document is the certification document. And I have to say that actually, I feel like this is the more important one of this application after looking at it. What you're doing here is you're reading each different line item, and you as the borrower are certifying that everything you're initialing is true and correct. And you have 2/3 of this where you have to initial by every line, validating that it is true and correct. When you get to the bottom third where it says, in addition, the authorized representative of the borrower must certify by initialing at least one of the following 2 items. So at the bottom, you have the option of selecting the top one or the second one. And in this case, I had him select the second option. And basically that one is stating that he was unable to operate between February 15th and the end of his covered period at the same level of business activity as before February 15th due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020 by the Secretary of Health and Human Services, or Director of the Centers for Disease Control and Prevention, and OSHA, etc. Okay, and then John Smith signs the form, prints his name, and for the date, what I am really encouraging everyone to do is, as soon as you can have spent your money and can evidence the use of the proceeds, get your application together and get it into your lender, okay? And in this case, John Smith is the sole proprietor, so that is his title. Next slide, please. Okay, so this third page is optional, but I do have to say it's very important for the Small Business Administration for tracking purposes as to who received the money. So there are categories to identify, self-identify as a veteran or non-veteran, your gender, your race, and your ethnicity. Again, this form is optional, but it really does help the SBA evidence how the funds were allocated across these 4 categories. So again, it's optional, but we would encourage you to complete that form. Next slide, please. Okay, example number 2 is again the Form 3506EZ form, but this time it's for a corporation. And what I want you to understand is this could be for an LLC just as well. Not a real big problem, but I just wanted to give you an alternate example here outside of a sole proprietor. Okay, so in this case, Doe's Recycling Inc., DBA, the junk collector is our borrower. The number of employees is 20. There's an aggregate payroll of $64,000 per month, and the payroll is bi-weekly. The rent expense is $10,000 per month. Utilities are $1,000, and the covered period, we're giving you again an example of either a 56-day period or a 168-day period. Next slide, please. In this case, again, not to be repetitive, but this is just about your business. The only difference here is the selection of the payroll schedule. And in this case, I made the assumption that Doe's Recycling had a bi-weekly payroll. So I selected bi-weekly from the options. Next slide. Your covered period or the alternative payroll covered period, this is a little bit different because of the flexibility tied to having a bi-weekly or more frequently paid payroll. So option 1 is a standard covered period, which would be the date the loan proceeds were received, which was May 20th. And for the 56-day covered period, it would end July 14th, 2020. The alternative payroll covered period could be the first payroll date after receipt of the funds. And in this example, I said that the company's payroll, the first one after they received the funds, was May 22nd. So this would shift the end of the payroll period, the alternative payroll covered period to July 16th. Okay. Now, the other option that they have, again, because of the date that they receive their money being before June 5th, they can select to have their covered period run the 168 days. And again, they can select either May 20th or May 22nd as their start date. But you can see the impact of their covered period being extended out to November 3rd or November 5th. Why is this important? And the importance here of using that 168 days is because some businesses laid off their employees and they could not reopen their business at capacity or even partially for a period of time. And so allowing the money to be used over a 24-week period hopefully pulls in those business owners who were early appliers for the PPP loan and give them the opportunity to be part of the group that is able to reopen their business and hire their staff back. Next slide. The bottom of the page, again, looks very similar to what we talked about for John Smith. But in this case, you have payroll costs at $128,000 for the 56-day period. Again, I made no allotment for loan payments, and it's just the interest portion of the loan payments eligible under the program. Line number 3, the business rent or lease payments, in this case, was $20,000. Business utility payments was $2,000. So when you add all of the lines 1 through 4 up, it totals $150,000. In this case, the PPP loan amount was $150,000. Again, I take for line 7, do a manual calculation of taking the $128,000 and dividing it by 0.60, and that comes up to $213,333. So again, your forgiveness amount is still the lowest or smallest of lines 5, 6, and 7. And in this case, again, it's $150,000. The 168-day option here for the alternative covered period, again, the numbers are all the same. And it's just that you are getting the opportunity to stretch out the use of that money to help you meet your business's needs with the loan proceeds. Next slide, please. Again, we have the second page, certification. The only difference here is that in this case, Jane Doe is the president of the corporation. And again, I encourage you as soon as possible after the funds are spent and you can document the use of the proceeds to get your application in to your lender. Next slide, please. Again, the optional third page. I won't go over that again, just an example for you to see. Next page, next slide, thank you. Okay, example 3 is for a limited liability company, but I'm going to use the longer version of the loan forgiveness application that was revised June 16th. So the assumptions that we have are for ABC Painting Company, and it's doing business as All Weather Painting. The number of employees are 100. The aggregate wage expense is $350,000. The business mortgage interest payments are $30,000 per month. Rent expense is $15,000 per month. Utilities are $1,000 per month, and the covered period is 168 days. This set of instructions and application are included in this link, and we'll go on to the next slide. Okay, this one looks pretty much exactly the same as the EZ form for the first page, but let's take a look at it. Next slide, please. Okay, what I have for you is the legal entity name, their trade name, again, all of their business address. In this example, for the business tax identification number, I used an employer's identification number, EIN. So the configuration of the tax ID is a little bit different. Primary contact, email, business phone, fairly straightforward. All the other information is fairly straightforward. The PPP loan amount is $500,000. The date of disbursement was June 30th, 2020. So that tells you automatically that this applicant or borrower actually can only use the 168-day option. They received an idle advance of $10,000. Again, that idle advance is $1,000 per employee to a maximum of $10,000. The idle advance is a forgiven loan automatically, and then the application number. The payroll schedule that I used here is weekly. Next slide. Again, the covered period, because this loan was done after June 5th, the covered period, yeah, I have two options. The normal covered period is the date of disbursement, June 30th to December 14th, 2020. Or because this company pays weekly their payroll, they can cover the alternative payroll covered period, which would then be, in this example, July 6th, 2020, and their 168-day covered period would run to December 20th. And right here, what I want you to see is because the loan amount is not in excess of $2 million, you don't have to check the box. It's only for loans in excess of the $2 million. Next slide. Okay, so as we get through the actual form, what I want you to understand is a lot of these numbers are pulled from tables and worksheets, okay? And they are farther back in the application. So you may have to wait to do those forms or this form until you get all of your schedules taken care of. And I'm going to go over those schedules shortly. So the summation of this is that the payroll costs were $350,000. The business mortgage interest payments was assumed to be interest expense on a business asset loan, like an equipment loan or a vehicle loan or some type of term loan. And that interest expense over the covered period was $30,000. Line 3, business rent or lease payments. I made the assumption that they rented their building, but they also had equipment leases. So you can combine those if you have them on this line. And again, the assumption here is that it was $90,000. Line 4 is business utility payments, and that came out to be $30,000. Lines 5, 6, and 7 actually have to do with the full-time equivalency, full-time equivalent employees, and the salary hourly wage reductions. So again, what you're going to do is pull a couple of these from Schedule A. So you won't be able to fill out the form immediately. You have to do the schedules. So line 5, what we're looking at here is a total salary hourly wage reduction. And that is pulled from Schedule A, line 3. And in this example, I assumed it was 0. And that's why you have a 0 there. Line 6 is just a summation of adding up lines 1, 2, 3, and 4, and then subtracting the amount entered in line 5. In this case, it totals $500,000. Line 7 is the FTE reduction quotient. Again, that is from Schedule A, line 13. So you have to wait to do your calculations on that and do your entries on Schedule A before you can put a number there. And I put 1, and you'll understand why in a minute. The potential forgiveness amounts. Again, you take line 1, on line 8, you take the modified total, which is multiplying line 6 by line 7. Line 6 by line 7 in this case is $500,000. Line 9 is the PPP loan amount, which is $500,000. Line 10, you do the non-intuitive calculation again of taking line 1 and dividing that by 0.60. And that comes up to $583,000. Line 11, again, you enter in the smallest of lines 8, 9, or 10. In this case, line 8 and 9 are the same, but again, you could have a variation there. So you enter the lowest amount of lines 8, 9, and 10. In this example, it was $500,000. So this loan would be fully forgiven. Next slide. The certification form, again, here is very critical. And what I want you to do is read through each one, make sure that they are true and correct. And what you're really validating is that the money was used for eligible purposes, that it's true and correct. You're verifying all.
Janie, I think we lost you. Stephen, can you still hear us?
Sure can. She'll be back on shortly. We've had this happen before. I'm wondering though, if while she comes back on, if there's any specific questions that I might be able to answer while she's off.
You know, something I'm trying to understand, and you know, I've got a political science background, not an accounting background. If I'm mandated to be closed or operating at 50% during this time period, and so because of that, I don't have my payroll on board, or maybe 50% of my payroll on board, am I eligible for forgiveness from any of this?
You certainly are, and that's one of the things that the Flexibility Act provided, the additional capability to document that. And to be able to do it, if you use any more, 60% of the loan forgiveness, of the payroll portion for loan forgiveness, you're going to should get full loan forgiveness. And you've got 24 weeks in which to do this. And all you have to really do is document your inability to return to the same level of business activity, or your inability to rehire those employees to be able to qualify for the FTE portion. So the answer is yes. And keep in mind, though, one of the things that's kind of a misnomer about this is that the entire intention of this, when it was originally issued in March, was that the PPP be a employer directed unemployment program. So originally the idea was that you would keep your employees by continuing to pay them instead of them going on unemployment. Realize that's not the way it worked out, and so that's why they added the additional flexibility in the Flexibility Act when it was passed.
Okay, and that's helpful because we do have at least 5 counties that are basically restaurants are still mandated to be closed for in-house dining. So that's a helpful question. Janie, we're buying you a little bit of time.
Yes, I'm back. I guess my
how much
computer,
longer do you have, Janie, so we can kind of manage our members' expectations?
probably maybe not more than probably 10 more minutes.
Okay, we wanted to have a 90-minute call, so to the degree that maybe we can give them 15 minutes to answer questions. Is that possible?
Yes.
Okay.
We'll try and get through that as quickly as we can. Thank you. All right. So again, what you're looking at here is, again, certifying your wages, your FTE, which safe harbor you went through. So anyway, again, read through it, initial everything, make sure it's true and correct, sign it, type your name, get to your lender as soon as possible, and type in your title. Next slide. This is Schedule A, and this is the one that you need to do a little bit of work on to come up with some of the numbers that are on the first page of the application. Next slide. In this example, line 1 is the cash compensation from for your employees. And what I want you to think about is cash compensation is wages, it's tips, it can be bonuses, and it can be anything that you normally would generate in terms of compensation for your employees. All right. Then you go to line 2 and you enter the average FTE from box 2 of Schedule A worksheet table 1. I'm going to show you that next. And then because that has both the wages and the FTE. In line 3, you're entering in the salary or hourly wage reduction from box 3 in worksheet table 1. And again, you'll see that in a minute. In this case, in this example, the cash compensation ended up being $259,200. The average FTE was 100 because the business rehired their staff when they were able to at 100%. okay? And the other issue here is that they paid all of their rehired staff at least 75% or more of their salary that was designated between January 1 and March 31st. Okay. The PPP Schedule A worksheet table 2 totals. Lines 4 and 5 are only completed if you had an employee in 2019 who earned more than $100,000 in compensation. In this example, I assumed that there were no employees, so there were zeros there. The non-cash compensation of payroll costs that are eligible on line 6 are for employee health insurance paid by the employer. In this case, I made the assumption that it was $30,000. On line 7, you have the amount paid or incurred by the borrower for employer contributions to employee retirement plans at $15,000. Line 8 is a total amount paid or incurred by the borrower for state and local taxes assessed on employee compensation. That was $25,000. And what I want you to hear is that labor and industries and employment security taxes are both part of the state eligible taxes, okay? Even though L&I is insurance, it's still considered a tax and eligible for inclusion on this line. Okay, compensation to owners. Line 9 is the catch-all for all of the owners of the company, okay? And what you put in there is basically all of the cash compensation. And there are exclusions for owners. And what I want you to do is I want you to go to the US Treasury website and look at the last version of the guidelines. And on pages 12 and 13 of that document, they list out all of the includable compensation for owner employees, which would be the president, secretary, etc. if they're an employee of the company and they're an owner, self-employed individuals, and general partners. There are too many to list in this kind of presentation, so I really want you to go to that document and look at the type of business you have and look up and see what is includable and what is excludable on line 9. Line 10 is a total payroll cost. So you're adding up lines 1, 4, 6, 7, 8, and 9. In this example, it comes to $350,000. Next slide. Okay, so now this is really the important thing, and what the questioner was asking about, the full-time equivalency reduction calculation. Okay, you need to go through and look at this and see if you satisfy any of the 3 criteria by checking the appropriate box. And what you're doing there is going through and reading about your safe harbors, okay? And in this case, the first one is that there was no reduction in the employees or average paid hours. If you have not reduced the number of employees or the average paid hours between January 1 and the end of your covered period, you mark there. That's what I did because this person rehired everybody, okay? Now, there is the FTE reduction safe harbor 1, and that is if you were unable to operate between February 15th and the end of your covered period at the same level of business activity as before February 15th, due to compliance with all of the centers and the Secretary of Health and Human Services, etc., then you can check there. And that's your safe harbor as far as your FTE employee reduction. And then the third one is if you satisfy the FTE reduction safe harbor, which you have to do calculations on Schedule A worksheet and you have boxes to check here. Okay, so it's either the first one, the second one, or the third one. In this example, line 11, the average FTE during the borrower's chosen reference period was 100. And the total average FTE was 100. In line 13, you do a division by taking line 12 and dividing it by line 11. In this case, the answer is 1. So that's what you put there. Next slide. Okay, here is the Schedule A worksheet. And if you have more employees than there are lines here, what I would encourage you to do is to create an Excel spreadsheet with the same headings and put that together and then add that as a support document for your files. Same thing with table 2. If you had more than 4 employees who earned more than $100,000 in 2019, then do another Excel spreadsheet and do your calculations there, okay? And then the FTE reduction safe harbor number 2, you actually have to go through and do calculations in steps 1, 2, 3, 4, and 5. Next slide. So here's what this one looked like. I started on here, but again, I would have done an Excel spreadsheet because they had so many employees. You put in their employee's name, the last 4 digits of their tax ID number, their cash compensation, and their average FTE, and if there was any reduction in their salary or hourly wage. And again, in this case, they were all rehired, the salaries were maintained. And in this example, the cash compensation total is $259,200. The average FTE is 100, and there were no reductions in the hourly wage rates or salaries, so that ends up being 0. There were no employees that made more than $100,000 in 2019, so that would be non-applicable. Next slide. This, again, is your optional form. I'm not going to go through this. You already heard my drill a couple times. Next slide. Okay. If you have employees who made less than 75% of their wage, then you will complete pages 4 and 5 of the instruction form. Again, this is the instruction form. It is not part of the application. And you're going through and you're establishing FTE. Next slide. So at the bottom of page 4, you have the lines that you need to complete here. Again, this is only for employees who had a salary or wage reduction reduced by more than 25%. On the original application for forgiveness, you had to do this for every employee, regardless of their compensation level. So this is a significant improvement over the original form. And you just go through and you do this for each employee that meets this standard. Next slide. Page 5 is the follow over, and this paperwork, again, you would retain everything for the designated period and keep it in a file. And these are your documents that support your pages for your application. Next slide. So that's it for me. The only thing that I would encourage you to do if you have not applied for a PPP loan is get in there, get it done. The application has to be approved and authorized by the SBA by June 30th on new applications. So don't wait till June 30th to apply. It will probably be too late at that point. Thank you very much.
Okay, look, if Steve, can you stop sharing the document, and maybe you and our speakers can come on a video, and let's see if we have any questions for the members. Lex, can we open it up to our members?
Yeah.
So they'll be able to hear us now, or they just need to type in their questions?
They just need to type in their questions.
Okay. So So if any members have any questions that have, looks like most of them did get answered in the chat. I know the one question I'm going to get, oh, if they raise their hand, we can allow them to talk.
Yeah.
Okay. So do we have somebody raising their hand?
We've got Carrie.
Carrie, click on Carrie. Carrie, do you have a question for our speakers?
Yeah, I do. And this is kind of a general question, so I'm not sure you'll be able to really answer it. But it seems to me that at some point we should start doing a faux calculation, if you will, to get an idea of the trend and the track that we're on as far as what percentage of the loan is going to be forgivable. It's a little challenging for us because we were not able to reopen our dining rooms until June 5th, and we're still not fully opened. So there's still all these uncertainties about when and what's going to happen. And yet I want to start getting an idea here relatively soon what track we're on. So what do you recommend in that situation?
I would recommend that you start on completing the form and really identify the pieces that you know you're going to have to complete. For example, if you have some employees who had the 25% or more, well, the more than 25% wage reduction, start working on that form in the instructions, pages 4 and 5, get that taken care of. Again, if you have any employees who were compensated at more than $100,000 last year, get them started and do as much ahead as you reasonably can. Your lender may have electronic versions of these forms for you to complete. So it's a good exercise to get them started now anyway. And I would encourage you to do that. Steve, any other comments?
Thanks.
Carrie, I would add some things to that. One of the things that in business advising that we really stress is to do some fairly vigorous cash flow forecasting for your entire business. And you can do this in a way that identifies different scenarios about the amount of money that you may have coming in, and given that, the amount of money that you may have going out. And I would really recommend that you do that under different opening scenarios that you may get because of the uncertainty that you mentioned. I would also say, in addition to what Janie mentioned about making an effort to start to complete the form to better understand it, I would hope that you would be qualified for full loan forgiveness as long as you use 60% of your funds for payroll during the next 24 weeks, essentially, or the 24 weeks starting from the time frame that you received your funding or you chose the alternate covered period. That's a fairly long time relative to what's going on, though those no uncertainties, I mean, there's no certainties about it, as you said. So if you do the cash flow forecasting, identify the scenarios, make an effort to start on the loan forgiveness application. Keep in mind that now with the new flexibility, you don't have to bring back everybody to be able to get full loan forgiveness. You don't have to actually have them doing the same job. You don't even have to have them being paid the exact same amount. And it doesn't even have to be the same person that you bring back. You can be hiring additional people to still qualify for the full loan forgiveness. So as we'd already mentioned a couple of times, the Flexibility Act has made it a whole lot easier for you to be able to get your loan portion forgiven. And if you have trouble with that, I would recommend that you reach out to one of us, and we can certainly help you with it further.
Oh, I appreciate that. Thank you.
Mm-hmm.
Raise your hand if you have any questions or type in the room. Carrie, thanks for the question. I'm going to lower your hand, so if you have another question, you can raise it again. I think Jay Duffy had asked the question that I think everyone has in mind. And so even though you did answer it, Janie, I think it's something that I'm going to hear over and over again for those who can't be on the call. And I want to make sure we can all help our neighbors by answering the same question. So his question was, we have $30K left after the 8-week period. If I select the 24-month period, I'm concerned about maintaining FTEs as we're now operating 50% as a restaurant. Can I spend the extra funds if I extend the period and hope to satisfy the FTE count? I think that goes to what Steve was saying, but I think the fear is I can only operate at 50% because of the 6-foot barrier. and I can only have 50%. So just one more time, if you're trying to answer this question for your neighbor, how can they get full forgiveness if they're less than 60% of their payroll?
Well, if they actually only spend 60% or less than 60%, then they wouldn't get full loan forgiveness. So the real question is, can you spend that additional $30,000 during the next 24 weeks or towards the end of the 24 weeks and or the end of this year? So calculate, as Janie said, the 68-day period, Janie?
Yes.
From the date of the disbursement, or choosing the very first date following disbursement of your payroll period. And if you can utilize that $30,000. If you can't utilize that $30,000 during that time frame, you've got two options. Whatever remains, you could actually convert to a loan. You could work with your lender to have that loan converted to a 5-year term, which might make it easier. Or you can return the money, and the most that you would wind up paying might be some accrued interest, because there's no penalty for prepayment. So you've got some options there relative to that will still help you utilize most of the funds and give you some options if you don't.
The other thing that I do want to point out is, as long as you're using the funds for the eligible purposes and you meet that 60-40 split, minimum and maximum, then you do have safe harbors for the FTE tied to not being able to open at 100% because of your compliance with the CDC or, any of those governing agencies. So there's viability there for you. And I think the real key here is make sure that you're using the majority of the money, at least 60% for payroll, and not more than 40% for the other eligible expenses.
Jay, I've unlocked you, so if you want to unmute, I'm just curious, does this answer your question? Because I think it's a question that a lot of operators are going to have. So I'm highlighting you because if you can understand it, then I think it'll help other operators as well. Jay, you there? Okay. Jay may not be able to ask the follow-up, but with that, there's another question in the box. Does the governor's stay-at-home order qualify us for the forgiveness, even though they're not one of the agencies listed?
The answer is yes.
Mm-hmm.
Okay. And then there's another question there. For the FTE safe harbor around rehiring employees and restoring to the December 31st levels, well, I'm going to let you read the question there. I think everyone can see it. How would you answer that one?
Well, I'll give you my shot at that. The covered period, which I'm assuming that this question that I'm looking at would be the 24-week period, and or, depending upon when your covered period starts. But utilizing the funds during that covered period according to the rules that we've been describing. And if you choose the 8-week covered period because you're eligible for it in the beginning, the same rule applies. What happens to your employees after the end of the covered period is irrelevant. So if you maintain your employees through the covered period and lay them off right afterwards because of whatever your current conditions are, you would still qualify for full loan forgiveness. Janie?
Well, I think she makes a good point in that the way she's reading it, that is correct. I mean, you could go all the way to the end and not have your FTE number until the last day of your covered period. But the issue here is, how are you using the loan proceeds and making sure that you're complying with that minimum 60, maximum 40 split, okay? And if you wait too far into it, you may not have used all of your loan proceeds for the payroll and meet that payroll hurdle. So as Steve was saying, do some projections, really forecast out to what your payroll costs are going to be, in order to comply with that minimum 60% use if you want your loan fully forgiven. And again, just make sure that you're really using the other maximum 40% for those eligible non-payroll items.
Okay. We are at our 90 minutes, but we have more member questions. Some I've gotten offline here as well. Are you able to hang on for a little longer? What's your time constraints?
I'm fine.
Sure.
Okay, Aaron, are you able to hang on a little longer, or do you have to run?
I'm on.
Okay, thank you so much. All three of you, thank you so much. Mike did type his question in there, and I've gotten similar questions. So how do you handle the payroll period in Mike's scenario?
I'm gonna have to read.
No problem.
Okay, so this is a great question. Here's the thing, that if you have a payroll period that is right after the end of your covered period, that is includable toward your payroll costs. Okay, so let's say your covered period ends September 30th, but your next payroll date is October 3rd. That October 3rd payroll counts as part of your allowed payroll expenses because it's the next first payroll after the end of your covered period. And that is true of the other eligible expenses too. If they're accrued and paid right after the end of your period, they are allowed as well. Does that answer your question?
Mike, give us a thumbs up if that answers your question. And unless he follows up, I'll ask some of the ones that have come to me offline. A lot of our members are not experienced with SBA loans, or this is kind of their first time through this effort. Can you go bankrupt on an SBA loan, or is this more like a student loan that is something you can never, ever get away from?
Well, okay, here's what I'm going to say. You can file for bankruptcy and the loan is covered in the bankruptcy. The issue is that if you ever want to participate in another loan program that is federally funded, that BCAID federal loan is going to follow you until it's fully satisfied. And it may eliminate you or preclude you from being eligible for future federal loan programs.
Okay, I think that's a straightforward answer. If I were to repeat your answer to someone else, what I would say is, no, it's not like a student loan, but if you ever come back to the SBA, you're going to be blocked.
Correct.
Okay.
Well, but it's not just the SBA, it's any federal program, because there is a system that all lenders across the board with all the federal programs, it's called CABRs, and we all have to review that. Lenders all have to review that program to determine if you have defaulted on any other federal debt. So it's not just SBA, it's across the board. And there are student loans that have been problematic for some people to be eligible for SBA loans in the past, or some of the other ones, USDA, FHA, VA. There's a bunch of different federal loan programs that are reported, if they're not paid, into this CABRs system.
Okay. So what I'm saying is there's other federal programs that you also may get disqualified from.
Correct.
But most banks are backed by the federal government. That's not going to affect necessarily your ability to get a loan from another, just a straightforward loan from another federally backed bank, right? Just federal programs. Yeah,
as a reformed lender, I was a lender for 31 years doing SBA loans in the community. And what I'm going to say is that most lenders want you to be outside of a bankruptcy by at least a 5-year period of time, paying as agreed on any credit that you get from the time of the bankruptcy. And that's for a conventional loan and as well as, you know, a government program loan in the event there wasn't federal debt that was defaulted.
This question's, I don't know who can help this. So Aaron, I don't know if you want to bring your video back on. We have a handful of members who were new restaurants after the beginning of the year, and even some right as this was happening. Is there any of these loan programs that can provide them any relief, PPP or otherwise? Because I know they're feeling like lost in no man's land a little bit. Is there, if you were to guide these people or advise these folks that were new businesses at the beginning of this, so don't have a payroll history, what would you advise them?
So
Well,
first of all, I'll give a big, I'm sorry. That's tough. That's tough time to start a business, but I'm sorry, Janie, I didn't want to interrupt. Go ahead.
what I was going to say is that there is, if you were not in operation in 2019, for both the economic injury disaster loan and the PPP loan, if you were in operation between January 1 and February 15th, 2020, you are still eligible to apply. So you use a different data source rather than tax returns or Schedule Cs or something like that to demonstrate your payroll and your activity in your business.
Janie is correct, but the challenge with that is that you have a much lower threshold to demonstrate the economic injury, right? And so it's much harder to make a case for it. While you're eligible, the actual dollar amount that you may wind up being eligible for is going to be considerably less.
Okay, so if you can't demonstrate payroll after February 15th, right, the PPP is just simply not an option because of your timing.
That's correct.
Are there other SBA loans that are good options for someone stuck in this no man's land, no person's land, sorry?
So Janie will say, but the SBA right now is really attempting to try and push its other 7A products. And so if you're potentially eligible for those otherwise, that's sort of something that you want to pursue. Janie?
Yeah, I would definitely, depending on your loan amount, if you can pursue a loan of any type with any lender, and it can be a commercial bank or a credit union. Many of the credit unions do business loans. So what I would also encourage you to do, if your funding need is no greater than $350,000, what I would encourage you to do is look to some of our alternative lenders in the community who borrow money from the SBA and re-lend into the community for borrowers that don't meet traditional financial institution lending criteria. And examples of those are CRAFT 3, CRAFT number 3, Business Impact Northwest, Ventures, Mercy Corps. Another alternative lender that may meet your needs is Evergreen Business Capital. They have a slightly different pool of money. So we have great resources in our community to help meet small business owners' needs. And Business Impact Northwest and CRAFT 3 for sure were recipients of some monies for PPP loans for borrowers who don't meet, the more traditional application requirements. So I would absolutely advocate for you to look to those sources.
Thank you. Aaron, anything to add to that? No? Okay.
No, that's perfect.
Perfect. All right. Any other raising of hands or other questions? I can't tell you how much I really appreciate your time. Did anybody have a question that they didn't get answered, or even some of the answers maybe no tips? Common question we get. Our industry's tipped income is quite large, and so
Yes.
I'll let you read the person's question there, but I do get these questions in this office a lot of times around tips. So I think your answer will probably help a lot of people.
The reference.
Yeah, tips are allowed as part of that compensation. It's even better when the tips are documented.
And you know what? Here's the other thing. If you have employees that received tip money last year and clearly their tips are lower this year, you can take a look at the percentage from last year. It has to be a reasonable documentation of how much additional money you want to give in terms of tipping for your employees. It's kind of like a bonus, okay? But tips definitely are included. But I know that there are a lot of businesses that are suffering because they don't have the capacity to be operating at the same level. So look to last year and look at percentages that your employees that, earned, and in terms of those kind of tipping issues. And you can make allowances for that for the payroll.
So you're allowed to make your case, you may be paying them on payroll, they're getting the same hours, but because they're simply not having the same amount of sales, their tips are down quite a bit. You can make a case of why that doesn't count against your 60%.
Well, what I would do is I would make a case if you want to use some of the PPP loan proceeds to compensate the employees who are not earning the same level of tips right now. Okay, you can go back and say, well, as a percentage of their base wage, they earned 10% in tips. You can use the PPP loan proceeds to pay, increase their tip amounts based on historical percentages, but tips count as part of your wages.
Anonymous, let us know if you have a further follow-up on that, and we'll go from there. A last chance for any other questions. We are going to be turning this into a webcast, and so if you have follow-up questions, Lex, about how long? About 48 hours before we're able to get this up on our site? So about 48 hours, this will be up on our site, and you will be able to come back to different portions and follow up in case there's something you missed. And I believe I heard Stephen offer to share the PowerPoint. Did I hear that correctly?
Sure thing.
Thank you so much. We'll share that in the same section. So if you just want to review part of the PowerPoint from there. Aaron, your team at the National Restaurant Association, also our team at the National Lodging Association. Sorry, I just screwed that up in the moment. They've been amazing. And so I can't say thank you enough for all the work to get us here.
Anthony, do you mind if I plug one thing that harkens back to something Steven said earlier? I know we're going into Lord of the Rings movie type time period here, but I just wanted to jump in real quick.
You bet.
So Steven mentioned this earlier. Currently, a forgiven PPP loan expense is not tax deductible. That's nothing that the SBA did. That's nothing that Congress did. It was an IRS decision that Congress is pretty surprised about. Wait, you were supposed to allow those PPP forgiven expenses to be tax deductible. Payroll, utilities, and rent, those are all tax deductible expenses. But if you pay for them using PPP funds, then you're not allowed to deduct those from your taxes. So that's a huge, huge tax liability for many restaurants. Currently, there's legislation in the Senate Finance Committee called the Small Business Expense Protection Act, or S3612. Senator Maria Cantwell is on the Senate Finance Committee. She's currently not a co-sponsor of S3612. If she heard from the Washington Hospitality Association members about what these expenses might look like if they are not tax deductible at the end of the year, then I think she would be more apt to support this legislation, drive up its urgency, because we think this is something we have a 3 to 6 week window to really get through in phase 4 legislation. But we want to put that on your radar. S3612. And let's encourage Senator Cantwell to get on this bill that would really just fix something that honestly Congress wanted to do, but the IRS did not agree with that interpretation. So I'm just going to plug that. Please let me know if I can follow up with any more information. But thank you so much for having me aboard, even just to listen in to these great experts today. Thank you.
Well, and Aaron, you've been answering a lot of the questions on the open and the other, and your team and got not only the NRA team, which has been great, but the the American Hotel and Lodging Association. We've got great partners there. Oh, one last question that came in the chat room. Do tips count against the 60%?
Yes.
Okay.
In this, and I want to clarify, if you use the loan proceeds to pay for tips, tips are included as part of the wages and as part of your aggregate payroll. So the answer is yes.
Okay.
Yeah.
Well, again, thank you so much for your time. I know a lot of this, and even like Stephen, you said this morning, there's even more clarifications being issued by the day. So being willing to be out there and do the best you can and answer your questions, we appreciate it.